In this trading method RSI2, I actually have two plays where I show that I got in and out, and then right afterwards there was another entry point where I got in and could ride it all the way up a little bit extra. So the first one was a small play, the second one was a little bit nicer play. So stay tuned for the second play there. It was actually a very good play, and you'll see how that worked out. This is legend. We want to look for that RSI2 below the 10. RSI being the relative strength index, 2 being the 2-day interval. And that first entry point was here on 7/19, right? So July 19th. Now I'm showing charts of previous, because what I did is just kind of picked a spot on the SPY, and this is using the SPY ticker symbol for the S&P 500 is what the SPY is. I kind of just did screenshots here, circled up some items to try to draw your attention to what I'm looking at. So again, on this chart here, you can see I've got a line down here showing the 10. So you can see straight across on the RSI2 being the yellow line, and when it crosses below that line, this number here, 7.89, being below 10, is a trigger for the purchase of that stock. So at that point, and again, these numbers here, since this is a daily chart, you can see down here the D is selected, so that's a daily chart. So this is end of day numbers, right? So you can do this. You don't have to sit in front of your computer, and if you're like me, you have a job, so you can't look at the market throughout the day. You really kind of need a way of being able to do things after hours, right? Or at least at the end of the market day. And you can even take a few minutes at right before market close and do this, or if your platform, which like Webull, you're allowed to do trading after hours for at least a few hours, right? So what I do is at the end of the market day, I can go in there and quickly see, okay, did it drop below my 10? And if it did, I'm a buy on the SPY. So, because I've already done the chart on it, I've already know that it's going to be above, it's meeting the criteria of being above the 200 MA on the 1 year and 5 year. So all I'm looking at for SPY is entry point. So it's a quick little look, right? End of the day, look, it's below 10. It's at 7.89. That's my buy point. And again, this is just my thoughts and my views. I'm not a financial advisor, so do not take this as financial advice. This is just me showing some thoughts and ideas of what I'm doing in my trading account. So it dropped below the 5.89. What's that price? That price is 547.31. I wrote at the top of the chart up here because it is a little faint to see, so it's hard to see, but that C stands for close. So that's the closing price for that day. L is the lowest that it dropped, right? H being the highest that price made it for that day. All this is just the day numbers. So on this day, it dropped at the end of the day below the 10, so I purchased it at 547.31, my first purchase. It gave me a second buy point right here. Again, it dropped to 969 below the 10, because obviously the number on the yellow number, yellow line, that's the RSI2 below 10. That's my purchase. And you can see right here with my green arrow, there's the end of the day. Since it's a red candle, the bottom of that candle is where it stopped, or it ended. So it stopped there. End of the day, 539.58. Now, how do I know I was still buying and I'm still in it, right? Because I'm, as we said in the first video, our time to get out, our exit point is the MA5 up here, which is this green line, right? Well, it did not get and stay above that green line. It either was on it for this candle or it was below it. So I am not getting out of it yet, right? It is not giving me my exit point. But I did not buy these. Why? Because those were not, as you can see on the RSI, those were not below the 10. This one dropped below 10. It said, for me, that's another buy trigger point. So there's my second purchase of 539.58. It again dropped below the 10 for a third purchase. Right here was our second purchase, right? Remember that one just a second ago. We did this one, and the next day it did not get above that 10. It stayed below 10. It's at 7.1. What is that candle at right here? It's right here. The screen over pointing at it. This was yesterday. This is today. What's that price? 536.76. So now we have a third purchase of this stock. So we have 3 shares now. I'm just assuming I'm buying 1 share of each. Each purchase, I'm purchasing 1 share. So I have 3 shares just to keep it simple. So again, I'm looking for that 5-day moving average. And that's what we're going to set our stop at. But I need the price above it. And what do I get? Finally, I get that price above it right here. So the candle is up here. It closed at this orange arrow line. I kind of drew that in just to show you that up here's the price, 549.13. You can see that's the close for the day, 549.13. What's the MA5 sitting at? 542.42. It's below my closing price, so therefore the price of the stock is higher. Therefore, I am putting my stop on. The candle's up here above the green line. I put my stop on the green, right? I put my stop on the green line. So I've got my stop there at 542.42. The next day, the price opened at 550.88, but my stop is at 542.42. So if the price is still higher than my stop, I'm still in the play, right? So as long as that price does not get at or below 542.42, which is where my stop is, then I'll stay in the play. If it does go to 542.42 or below, it will kick me out at my stop price. And therefore, there was a big sell-off that day, and it got down as far as 537.78 for that day. Okay? So the stop was triggered at 542.42. So right there alone, I saved myself that difference, 542, 537, right? So, I mean, I saved the almost close to $4, $5 right there. You know, I saved that from the drop. So I did not ride that thing all the way down to 537. I got kicked out at 542. But the good thing is, I was here. That was where my stop was, where we showed just the slide before, where my arrow cursor is, and my arrow is pointing. This is the candle that ended up kicking us out. As you can see, it started the day off up here, where it ended. It started up here. Had we had another green day, we'd have ride this thing on up. But it had a little bit of a sell-off. And when it did, it fell all the way here, which of course we had our stop here. And you can see up here this orange number. It got as low as 537.78, like we said, and we got kicked out at our 542.42. So, did we make anything? That's the question. Or did we take a loss? Well, let's see. So our average purchase price right here, I wrote it out right here in this box, or on this empty area right here. Remember, our buys were 1 right here, 2 right here, and 3 right here, and then we got kicked out right here. So our first buy, 547.31. Our second buy, 539.58. Our third buy, 537.76. So if I got 1 share of each, I add them up, divide by 3, I get my average buy of 541.22. So that's what I need to have made at least to break even. What did it close at? I got kicked out at 542.42. The summary here, average buy 541.22. I got kicked out on the MA5, the moving average, 5-day moving average, at 542.42, just like we showed up here. So I earned $1.20 per share over just 12 days. But you can see, I got kicked out right here. Luckily, I did, because look what happened the next day. It fell all the way here. And then what happened the next day? It fell all the way down here, right? So I got kicked out up here and luckily got kicked out in profit, right? So like I said, I would much rather get a small win or even a big win, right? I like big wins, but I'll take a small win or I'll take a small loss rather than riding the wave down. I like to ride the waves up. I don't like to ride the waves down when I'm purchasing stocks. So it was a huge win just because of that, right? I didn't ride that wave down, so therefore made that $1.20 even more money, if you ask me. Because as you can see on that graph, we could have rode that stock all the way down to 508.71 per share. So yeah, like I said, yeah, that's a huge win. So that was the first play. This is the second play, and you'll see it happened right after this one. So again, all we're looking for is that RSI2 to get below 10, and when it does, there's our buy-in, right? So this is just where we were just at, just a second ago, right here. This is that what I was talking about. Remember where it dropped, and then it dropped, and then it dropped, right? And I was saying, good thing I didn't ride that thing down, right? I got kicked out up here on my first play. So now, let's see what happens. Oh, look, it dropped, and what happened? It actually dropped below the 10 on this day, okay? We didn't catch the bottom, right? We didn't catch the 508.71 bottom. It closed at 515.80, but even at that point, it's still below the RSI 210, right? It's sitting at 505. So that again is a purchase for me. So you can see up here, I circled this here. I got this boxed in. This is the close of the day, 515.80. And I wrote at the top once again. So my first purchase at 515.80. Now again, you can purchase as many shares as you want, but just to keep things simple, I'm only using one share. Now the price gets above the 5-day moving average, all right? The MA5, that's a 5-day moving average. That's what that stands for, and that is what the letters up here stand for. It's in the chart. So what you can see here is this orange arrow that I've added. We closed a good ways above the MA5, all right? And since it went so far up and it's green, I'm going to go ahead and put my stop at the bottom of the green line, okay? So we're going to set our stop at that MA5 right there. So we have our stop set at 522.74. All right, 522.74. Remember, we got in at about 515, right? So we're already looking pretty good. All right, so we got our stop set at 522.74. And at this point, we don't know what's going to happen here, right? We don't know what's going to happen, but we're in. We know we're locked in, and we know if this thing turns around, goes red, and falls out, well, I get kicked out at 522.74. I'm in at 515. I take my $7 and I'm happy. For what, 3 days? Yeah, I'll take that. Times how many ever shares you have. So again, we have our stop set at the 522.74 right here. So the price keeps moving up. As you can see, the price just keeps moving up, and therefore so does the MA5 here. It also follows it because it's the 5-day moving average. So I'm moving that average, right? I'm putting that MA5 or my stop loss at the MA5 right here. And then it's way up here. I move it to here. Then it's way up here. What do I do? I'm right underneath it, So each time I'm moving it up, maybe that's 537 right here. So, and then the next day I'm here. And the next day, it closes here. I'm right here. Then the next day, it has a little bit of a red candle, but it's just a little small red candle. So I'm right here, right? So I'm sitting right there. And that number is 552.20, right? So it's sitting at 552.20. I'm just going to sit. I got my cards, and I'm holding them, right? I'm going to see what it's going to do next day. Is this thing going to just keep on going up? If so, I'm going to keep on moving it right up that moving average 5. But let's just see. Well, as you can see, what happens is this one's a little bit clearer. The other one's got more writing on it, so I'll stay on this chart. So as you can see, it's moving sideways, right? Now, could you have moved it up? You definitely wouldn't want to have moved it up here, but you could have. And had you moved it up, you would have got kicked out at this point right here. And that's fine too, right? You would have actually got kicked out a little higher than where I'm at, right? But what I like is when I start seeing these long wicks on the bottom and they're getting really close to touching my stop, I just set and hold. I'm going to sit and wait because this thing might trade sideways for a little while. Do a little consolidation, right? And then all of a sudden it started going, right? And it started right here. It tried. At that point, if this would have took off again, this green line would have then turned upward through here and followed those up. Well, at that point, I would move my stop now to all the way over here, right? Because now I'm riding this thing up, so I'm moving it up that one. So that's the reason if I start getting long wicks on the bottom, what I mean by wicks is this little line sticking underneath the candle. You see them on the red candles and you see them on the green candles. Here's a wick on the upper end of the green. What does that mean? It means the price went all the way up to here, but it came back down and then it closed right here. Okay? Same with the red candle. The red candle, it started here and it went all the way down to here, but then came back up to here and then it closed. Red candle, it's always closing on the bottom of the candle. The green candle, it's closed at the top of the candle. Okay? So anyway, so my stop being here at 552.20. The stock is trading sideways, consolidating. So I'm just staying right where I'm at. I'm not doing anything. I'm going to see what's going to happen. And what happens? It looks like it's getting ready to go. I'm still waiting, right? I'm still waiting because this candle looks like it's going to take off, but I don't know. So I'm still waiting. I'm way back here, right? This thing's consolidating sideways. And if this thing takes off, then maybe I take my stop and I don't just move it one spot. Maybe I move it all the way over here and get back close to the price. But you can do however you feel, however you want to do it. And you'll learn your own ways of doing it. Everybody has their own risk tolerance, I guess you can put it. So my stop's here. The price drops on that next day. It was getting ready to take off, but then it fell, had a sell-off, right? Well, that sell-off right through here, it definitely crossed my stop. So I'm kicked out. So I'm stopped out. So now we get stopped out at that 552.20. Our first entry and the only entry, right? You don't know how many entries you're going to have, how many opportunities you're going to have to purchase. In this case, we only had the one right here. Bottom of the RSI right here at the bottom of the chart. We hit that RSI below 10 and we pretty much stayed above that 10 all the way to here to the point we got kicked out. So we were in this one here for almost a month, but we started from 515 and we rode it all the way to 552.20. Wow. So our first purchase, 515.80 on August 5th. The stop, we moved the stop several times, right? We moved it all the way up through here as we're just tracking that stock moving upward, right? We don't want to stay back here, right? I don't want to stay back here. I want to ride it up because I want to make sure I'm capturing the small movements there. And plus, I'm only looking to hopefully stay in it within a week, 2 weeks, maybe a month. In this case, it was almost a whole month. So your final stop being at 552.20, the price drop on September the 3rd, it triggered our stop. So our earnings, we take where we stopped out at, the money that we ended at the end was 552.20, subtract what we paid, 515.80, which gives us $36.40 per share in just under a month. That's over 7% in just over a month. That's crazy. That's awesome. So excited on that one. So, like I said, we were able to ride this one for a while. We made $36.40 a share. So that was 7% in less than a month. And if you do that, you annualize that, that's 84, almost 85% in a year. That's great. That is amazing. Riding it from the 515 all the way up to 552. That's amazing. And like I said, with moving my stop, I'm protecting myself. So if this thing does turn on me, I stop out and hopefully I'm in profit. In this case, once it got above my cost, I was in profit, right? I luckily got in profit almost immediately, you know. So we got in here, the RSI, and we got an out on the MA5, right? Which put us right here. Oh, and look right here. Look what happened. It came down when we got stopped out. The price came down. Look what I see right here. Didn't even see that when I was marking these up. There's another purchase right there. That's another purchase. It dropped below that 10. So I got that line there. That's 10. It drops below that 10. That's that red candle right there. And that red candle went all the way down to here, which is, we'll say 537. And then boom. So we'd have had one buy-in point right here, 537. It got here, say right here, it's above the MA5, right? It's all the way up here, back up to 520.20. I'm not going to set my stop at 520.20. I'm going to set my stop where? Right back here. Now, these have these long wicks, right? And I normally would not set a stop within that wick. But this is a little bit different. Why? Well, because it stopped way above the MA5. See, MA5 way down here. It stopped way up here. There's a good bit of distance there. And if I put my stop here, since I purchased here, and if I put a stop here, I'm guaranteed to be green, right? I'm guaranteed to make a little bit of money. So anytime that I can guarantee myself to turn out a win, I'm going to do that. I'm going to do that. And you can see this one here rode, and you could have been right behind it, right? Right behind it. And you might have waited here, right? Because of this dropping back down. So you might have sit here and waited, but then when you get this gap up right here, I'm jumping right back up to here, right? So this here, if you look and you're setting that for this day, and then this day came down to here, but you're down here. So it still does not touch you. You actually would be in this play off the chart. I don't even know how long you would be in this play, but it looks like the chart on this graph here, on this screenshot, it's at least 568, and you got in at 537. 537 to 568, that's $31 right there. And I don't even know how much further you would have went. Maybe you get stopped out right there. Maybe it falls down afterwards. I don't know. But it doesn't matter. You can see there, right there is another 30 bucks. That's another $30. I didn't even see this one. Oh my gosh, I didn't even see it. That's another one. So this one screenshot, I showed two plays, but actually found a third one at the very end, right? So you can see the first play, we got in 3 times. We got in right here, 1, 2, 3. I purchased 3 times, and got stopped out, but I got stopped out and we made about $1, right? A little over $1. Not a big win, but hey, it's a win. Then it fell down right here. We only got one buy-in at this point before this thing took off, right? And I don't have a stop set, right? I don't have my stop set because I'm waiting for this to get above the MA5. And once it gets above the MA5 and closes, then I'm going to put my stop right there. And in this case, again, I am in profit, right? I was in profit, and I rode this thing all the way up. Then I got my third one right here. So just this single screenshot, there are 3 plays. 2 of them would have paid over $30 a share, and the first one would have paid $1.20 a share. Still, I'll take that all day long, right? That is awesome. And I didn't even see that last one. That's amazing. So it's always best to get your stop set. You know, at some point when that MA5, when it gets to the point where the price is up above it and it's closing up above it, you're going to have to set that stop at that MA5. Sometimes it's setting it at a loss, right? Sometimes the MA5, because the price has just gone down and gone down and gone down, and then by the time it turns, maybe you take a little bit of a loss, maybe you take $1 loss, right? Could happen, But just that screenshot alone, I showed you where that first play looked like we were going to end up taking a loss on, right? But we ended up pulling out, got $1.20 off of it. But boy, did we make out on the next two. Well, the next one, right? 30 some dollars on the second play. And the third play I didn't see until just now, where it looks like we could have made a little over $30 again. So don't want to ride it down, down, down. And that's the reason I say, once it gets up above that MA5, you set your stop, because you don't want to ride this price down, down, down. Kind of like what we saw in that first play, right? That's what I'm stating right here. What we saw in that first play, where we had that big drop and then a big drop and then another big drop. You can take it back and see at the very beginning, that first play where it stopped, dropped, and it went all the way down, remember, to like 508, right? And oh my goodness, you don't want to ride that thing down, because you don't want to be in that play and have to hold it that long. Sometimes it's better to take a loss to get it reset, and you'll be able to get in at a lower price, right? If I bought it and it kept going down and then kicked me out and I'm at a loss, but then it keeps going down and I'm able to get in at a lower price and then ride that thing up, I love that, right? I'll make up the difference, that's for sure. So not all trades will be huge wins. Hopefully you're starting to see, what you could do with this method. It's a pretty awesome method. So I'll wrap it up here, and let me know what your thoughts are, and hopefully this was useful. Legend out.